So yesterday we saw US market correcting, though it has bounced back from the bottom in the evening. The decline was mainly driven by US Fed minutes, which got released yesterday, and that was indicating that the Fed will be more concentrating on inflation and will be increasing interest rate by 0.5%. And also they are discussing tapering to start from May, and the amount will also be higher than what was market expectation. Uh, the Fed indicated that the discussion was indicating that the decline in the Fed book could be $95 billion to start with, against market expectation of around $60 billion. So that has taken the market under pressure for yesterday. Nasdaq was down more as the higher yield expectations had impact on valuations of the IT company. Apart from that, even if we see the Asian markets are also showing some indications of decline. Japan is down higher by around 2%. Otherwise, the other market apart from Hong Kong, which is comparatively flattish or marginal down, other are down over 1%. Even we are seeing the impact on the commodity. The oil is down from yesterday level of around 107 to around 103 today. Aluminum is down by around 2.5% in China today morning. Copper is down by around 0.5. Iron ore is down by around 1.8%, and steel is down by around 1%. So across the board, some risk of is happening because of the Fed move. So quite possible we may see similar type of actions in Indian market also. Now I'll request technical team to talk about the market today.
Thank you, sir. Good morning, all of you. Yesterday we see some profit booking in higher range, but we see the next important support zone for Nifty 17,650, 17,600 at downside. If Nifty managed to sustain this range, then we again see the positive momentum. But in this week, we expect the range for index is 17,650 to an upside 18,000. So any deep, if Nifty managed to sustain this level, then we expect the momentum. But today, first half open in negative note. If Nifty managed first half 17,650, 600, and again trade above 17,800 above range, then we expect the positive momentum in upside towards 18,000. To Nifty immediate intraday support place around 740 and 17,650 at downside. Bank Nifty also trading the higher range, and we expect some profit booking. Yesterday also we saw that Bank Nifty see some profit booking. The immediate support place around Bank Nifty is 37,500. If Bank Nifty managed to sustain this level, then again upside immediate resistance place around 37,800 and 38,000 in upside. So we see the between range only this index, both index. Nifty Finance also looks higher range in positive side, but we see some profit booking, and next important support place around 17,300, and below 17,300, 220 next important support zone, and 17,500 next important resistance. So we expect first half in negative zone, but in the Nifty managed to sustain above this range, then we expect market in trading in range bound in this session. And stock specific, Hindustan Unilever looks positive at current level also. Yesterday close managed to close about 2140 range. So we expect is first up managed this range, then 2170, 2119 and upside next immediate resistance for actual. Downside support place around first support place around 2120 and 2100 in downside. So we expect if managed to sustain, then we expect positive momentum. Tata Steel also looks positive at current level. We yesterday see that Tata Steel also closed the important breakout level. To expect the positive momentum towards 1400 and 1420, and support place around downside around 1340 at downside, 1330 support for Tata Steel. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. See, on the derivative side, um, most important support for Nifty was around the 18,000 level, which has been broken. And there is a considerable amount of open interest built up around the 18,000 level. So until Nifty again regains above 18,000 level, you will see selling pressure coming in, and Nifty can drift down towards the 17,500, 17,600 level. So there will be further selling which can come in. But also, one thing is there. The open interest continues to remain low. It has been shifting downwards considerably since the last 15 days. Um, so that is a good sign. But again, when you see Nifty coming down, the VIX has again shot up, around the 20 odd level. So that is one area again that we need to see. But all in all, data is little negative. So we can see some selling pressure coming in for Nifty up till the 17,600, 17,500 levels. From the stock specific front, um, looking at the overall data, looks like banks can still see some amount of buying. Some select banks can see some buying, while PSU stocks have witnessed good open interest action. So stocks like Coal India, ONGC, SBI, these stocks can move up as well. Even Tata Power and power stocks, Torrent Power, Tata Power, these stocks have seen some aggressive long built up, and they can witness further buying going forward. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So yesterday we interacted with the management of Pitti Engineering. Last week also we had discussed in brief about the company. It basically sells steel laminations, which is the main product used to make all types of motors and generators, which are used in various industries. So it forms a core product. Company is the largest lamination steel player in India. Over last 5 years, company has increased the share of value-added products from almost 0 to 70% today. And we are seeing that capital goods sector is also witnessing good tailwinds, and most of the companies in cap goods are having order books at all-time highs. So we expect Pitti to grow its sales at 20% CAGR and profits at 25%. Which is one of the fastest in the cap goods industry. And we expect company to post a FY23 EPS of 25 rupees and 24 EPS of 31 rupees. So at a multiple of 15 to 16 times, we get to a target of around 470 to 500 rupees per share against a current market price of around 325. So it's a decent company to own, and as a proxy play on the capital goods revival in cap goods after 7-8 years of down cycle in the cap goods industry. IDFC Limited also announced that it will be selling IDFC AMC. So this news was already in the markets since a few days. So yes, still it is marginally positive as things are progressing towards the reverse merger with the bank. The mutual fund has been sold to a consortium of Bandhan Financial Holdings, GIC, Tangerine, and Chris Capital. The sale consideration is 4,500 crores, which is also in line with expectations. So after this step, still IDFC Limited will have to exit 2 joint ventures under IDFC Foundation with the governments of Delhi and Karnataka as the next step in pursuing the reverse merger process. Company has not provided a timeline for completing the above corporate action, but because it involves multiple government agencies, so we can consider that it will take at least 1 year more. The sale proceeds from mutual fund post-tax, if we see, then around it will be around 4,100 crores or close to 26 rupees per share. And if we value the IDFC Limited stake in the bank at a 15% discount, considering the time value of money it will take to for the merger process, then we come to a per share value of 53 rupees. So if we add the both the bank value and the mutual fund sale value, then we come to a fair value of around 78 rupees per share as on today, versus a CMP of around 68 rupees. So there is still some modest upside left. And if somebody is willing to hold the shares till the reverse merger happens, then the target price is around 87 rupees, which is around 20 rupees higher from current market price. DCB Bank has informed that RBI has approved the reappointment of its MD and CEO, Mr. Murli Natarajan. So for a period of 2 years. So this is positive for the bank as he has been the one guiding the transformation in the bank. Tata Motors has said that electric vehicle volumes will more than double in the current year, that is FY23. EV as a percent of total vehicles was 5% last year, and this should increase to between 10 to 15% in current year. And company expects the share of EVs to increase to 25% by FY26. So this seems to be a pretty aggressive target, and it is also saying that it will have a portfolio of 10 products by FY26 relating to EV. So currently it has just a couple of products, so that is also positive. And lastly, Welspun Enterprises is in the news because there is a rumor in the media that Actis is nearing a deal to acquire a portfolio of road assets from the Welspun Group for about $400 million. And the agreement is expected to happen in the coming weeks. So if this happens, then it will be a positive for Welspun Enterprises. So that's it from my side. Thank you.
Good morning, everyone. Yesterday, Godrej Consumer came out with the business update for the Q4. The company expects India business to deliver close to double-digit sales growth, but that is mainly and entirely driven by the pricing, so which shows that the volume growth is negligent during the quarter. However, if you see for the 2-year CAGR, it would be in the early 20s. But the key pain point for the company is the international business, especially the Indonesia, where the company is expecting decline of in high teens and constant currency growth, and believe that the pain is likely to continue in short term. However, medium term can improve given that the company is taking steps towards it. To deliver higher than mid-single digit sales growth. I think there's some issue. I'll start again. I was talking about the Godrej Consumer, which came out with the update for Q4 yesterday. For India business, the company expect to deliver double-digit sales growth. However, that is entirely driven by the pricing, which shows that the volume growth is negligent. And the 2-year sales CAGR is in early 20s. However, the main key pain point for the company is the Indonesia business, which is expected to decline in high teens and constant currency growth. Company expects the short-term pain to remain. However, they are taking steps to improve the business and expect some recovery in medium term. On consolidated levels, management expect to deliver higher mid-single digit sales growth. And on profitability terms also, because we have seen steep increases in the raw material prices, the management expects lower EBITDA margins on YOY. So this is overall a negative development for the Godrej Consumer, and we expect the same. Like we also highlighted during the Marico that the sector is likely to face the margin pressure during this quarter. We coming to the Titan, which also came out with the Q4 business update. Overall, the sales has declined 3%, but the jewelry business, which contributes around 80% of the business, has also declined 4% YOY. Because of the various headwinds the company faced during the quarter, like in the January month, the Omicron lockdowns, partial lockdowns due to Omicron, and later due to the sharp increase and volatility in gold prices, and also the uncertainty due to geopolitical situations. So all these things have impacted the sales, and that is why the jewelry business was muted for the quarter. We expect Q4 numbers would be priced in today, and we can see a negative reaction in today's trade. However, going forward, we believe that the Q1 is expected to be doing well, because now all these things are factored in, and plus there is a huge demand from the wedding side which would benefit the company for Q1. So we are seeing that huge marriages and weddings are happening in this quarter, which is likely to continue and remain the keep the demand strong for going forward. So for today, the stock is likely to go down, and we recommend investors to use this dips to buy the stock for long term basis. Thank you.
Good morning, everyone. TCS is coming out with its quarterly numbers for Q4 on 11th of April. The company is likely to post a dollar revenue growth of around 2.6% and come in at around $6690 million. Management last quarter had indicated that the supply side intervention is expected to continue in Q4, but this EBIT margin is expected to be muted Q1 and come in at around 24.9% versus QQ of 25%. Last quarter deal wins for the quarter was stable at around 7.6 billion. So improvement in the deal wins this quarter would be the key thing to watch out in the results. Other key thing to watch out for the result would be the demand outlook for FY23. Thank you.
Yeah, apart from this, Lutha developer that is has announced 3 sales figures, and the numbers are very good. Has shown very good growth on higher base also, so that can act positive for the company. Apart from that, today Invesco will be selling around 7% holding in the Z. They have around 17% holding in Z, out of around 7%, by around 7% from the current market price. So that will have a negative impact on Z share price today. Then tomorrow RBI policy is there, and the expectation for the RBI policy is that there will not be any rate change expected in the market. But there could be some indications on the high inflation is running, so quite possible they may indicate that the plan for the rate increase in the coming period. So if they come up with any indications on rate increase, then that can have some impact on the market. Then the coking coal prices has come off sharply in last few days. Before this war, the coking coal prices were at around $400, and then it went up to as high as $650, and now it has corrected back to $380. So somewhere this will act positive for steel company, considering that the steel companies has increased the prices in line in the expectation of increase in cost on account of coking coal, but now the coking coal prices has come down and steel prices are still holding up. So that can act positive for steel companies. But on the other hand, the coal prices, that is thermal coal prices, which went up to around $450 earlier during the initial period of the war, came down to $225. And now again are indicating a move on account of shortage in Indonesia and Australian market, and lower supply from the Russian and Ukrainian market. So the tight situation is pushing up the coal prices, and now it is at around $280. So again showing some movement on the upper side, which can have negative impact on cement stock. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.